Well, good morning, everyone. Welcome to our Friday morning trading session. TGIF. Woohoo! Let me get you my screen here. I might not be the sharpest knife in the drawer today. We had friends come over last night, and they thought that Thursday is the new Friday. And we didn't get them out of here until, I'm sure I saw 1 o'clock, maybe a little bit later. So I'm dragging my butt here a little bit this morning. Okay, here comes I'm sorry if you hear me yawning. I'm going to do my best to hold back the yawns. This was a buy signal here that I was just about to try to get on board with. We still have a chance at a second push on the entry, which probably is a pretty good idea given how early we're looking at trading. With the second push entry, we simply let the market engage the order, show us how high it's prepared to go, and then place your entry above that point. So all you're really doing is you're looking for some renewed momentum to take the market higher. Do we have a rule of 3? Maybe a very slight rule of 3 here. It does look like prices might be starting to fold over just a little. So we have 1, 2, 3 breaks against the hard edge. Very, very slight bullish band here. If we take a look at the overnight, you can see that the overnight has been down. So a little bit of a retracement here almost has the look of a bear flag to it. There the market is turning over. And was that in sync for our first micro-macro cross? It may have just come into sync, but we should see a little bit of a bounce here and maybe another chance to get on board. Jim says the advanced decline very bearish today, about 1,200 or so to the negative. And it is Friday. A lot of times traders get busy Friday. They get their orders in, get their work done, go home. Okay, here's a first micro-macro cross, which just ran away from me. The problem with this one here is, well, actually, before I call that the first micro-macro cross, let's take a look at this one. Oh, this one just came into sync here. Just the macro line just came into sync, but a lot of times, you look at this and you won't necessarily recognize that it is the first micro-macro cross. The problem with taking this one is covering the trade, right? The stops are right here. I probably would want to cover a little bit deeper, but it looks like that was no problem finding the first profit objective. Oh wow, the advanced decline falling hard. Now we're negative 1,400, so it looks like we're in a selling day today. Let's take a look here. The Raptor, the Geiger counter, very bearish. Oh, there they go. So once again, the moves coming early in the NASDAQ. Wow, the advanced decline falling even harder. Now they're closer to 1700, a negative 1700. That's very bearish, very bearish. Mike is asking about the advanced decline. I'm assuming Jim is watching it on Ninja. Oh, he says interactive brokers. Jim says that's where he's getting his advanced decline information. If you're interested in that sort of thing, you can see whether or not it's part of your data assortment. I do believe add is the symbol. Yeah, here we go. On your NinjaTrader, the symbol is add. So ADD, New York Stock Exchange, advancing issues, declining issues. It's an indicator, so it doesn't have a month. So we put that in our list. So there it is. And now you would open up a chart, providing you get your data feed for that. And you can set it, however long you want. Probably 15 minutes is a fairly decent time frame. And then you're going to get one of these. All right, so it tells you the number of shares being sold versus the number of shares being bought. The notion is that if there's a lot of selling going on, the stock indices are going to head lower. It's a very good confirmation tool. It's one of these tools, again, where you need to take the data relative to what's been posted and not necessarily an absolute number. So for instance, the other day, we were trading, and I don't remember exactly, but the advanced decline was positive and falling. So you would think, well, the advanced decline is positive, the stock indices should be going up, but they were actually heading down because the numbers were declining. Even though they were positive and very bullish, they were actually falling off. So same thing with what we have today. You can see there's a negative 1750. But if these numbers start to climb, the stock index will probably head higher. It's a good way to kind of get an overall feel for the market. Some people find it helpful, as with all tools. If it helps you make a decision, great. If it doesn't help you make a decision, get rid of it. They all have their pros and cons. I don't care whether you're looking at stochastics or RSI or advanced decline or ticks or whatever. They have their good points, they have their bad points. Good question here from Mark, and I can tell that Mark knows how to type. He's not a hunt and peck typist. Mark asks, good morning, Eric. A question. At 5:30 your time, news came out and the NQ moved a crazy amount on the hawk in a 1 to 2 minute time frame. It was extremely volatile. And although I'm used to trading the E-mini and seeing some volatility once in a while, that particular move was super fast. A lot of bars very quickly. Is that normal? News was the non-farm payrolls and hourly earnings. Both were positive reports. I'm just curious if things move this fast on the NQ like it did in this case. I've only been trading the NQ for a month or so and not used to seeing things move as fast as they did during that time. Sorry if this is a long question. I wanted to ensure I articulated it enough for you to hopefully understand what I was asking. It's fine, Mark. You type all you want. It is unusual to see here. Let's go take a look at the time frame in question. So Mark says at 5:30 it came out. Oh yes, I see what you're getting at. So this is on the hawk. It's going to unfold a little bit faster anyhow. So it looks like the report kind of hit the floor here. And you can see from look at the time chart at the bottom. You see this is all within a second. This just went boom, like here. And then 2 seconds later, boom, down here. 5 seconds later, down to here. 4 seconds, another second burst higher. So all these things were unfolding very, very fast. And that is unusual for the NASDAQ. Crude oil, natural gas, par for the course. But the NASDAQ, that would have been very unusual and virtually impossible to trade. Yeah, you don't, even on non-farm payroll, which is a biggie as far as reports go, you don't see the market unfold that fast. The nice thing is that you probably don't want to trade when it's that volatile anyhow. So you can see from back here to right here is about the span of a minute. And then it looks like they're still moving along, but they're settling down. You're at least getting the market advancing. You're getting a chance to recognize some signals, maybe even get a trade on, especially, when you're looking for high probability signals like the first micro macro cross, like the macro pullback. But no, Mark, you will be relieved to know that is unusual. The way the market unfolded this morning, that is a fast market for the NQ. That's what it's normally like, where you get the signal, you can't waste your time putting the signal on, but you get some nice progression, you get another signal, more progression, and that is a normal fast day in the NQ. Mark says, I thought there was something wrong with my charts or something. The signals were printing like crazy. Yeah, it's, the market, excuse me, the stock market, pardon me. I remembered to hit my mute button that time before I had my little coughing jag. The stock market in particular, I think is pent up for a while. There's a lot of sideways action been going on in the market of late. And I think that a report as influential as a non-farm payroll, which is a big one, may have just been the catalyst to release all that pressure on the market. We'll see if they stay with this direction now that they've actually made some sort of commitment to it. We are getting a first micro macro cross signal now and a trend change signal to the upside. We're into the hard edge on the Raptor, very close to the hard edge on the Eagle. Now, you always hear me say these first micro macro crosses are very high probability signals. I almost take them without exception, blah, blah, blah. Because this is obviously counter trend, I would set it up like this, where I would look to enter above this current little swing high, cover below the low, if it engages, I might even remove my profit target or stretch my profit target a little bit. But whenever you get these types of trades, now you need to use your head at least a little bit, right? Oh, thanks, Joe. Joe saying, it's quarter to the hour, Eric. This is your least favorite time of the day to trade. Yes, absolutely. You need to use your head a little bit. First micro macro cross signal, yeah. Very high probability signal, yes. But look at this crazy downtrend that we're in. Does that mean the market will not reverse and head higher? No, absolutely it does not. The market can do what the market wants to do. But is it not more likely that we might see this as a bear flag and the market head lower from here? That does seem a little likely, doesn't it? And of course, before the market can reverse, we need to see a test of the extreme. We need to see it challenge these lows, fail, and head higher, which is exactly why I'm running such a deep stop. The trade is now into yellow bars, so I can delete it, but there's something to be said for following the signals blindly, but at the same time, you do need to turn the brain on just a little bit. Because I know somebody is going to write me and say, Eric, I took this trend change signal and you told me it was a good signal. Why didn't it work out? Well, did you notice that the market plummeted going into that signal? I won't be quite that rude in my response, but that's really the effect. And see, now here we are, we're coming back with, we're syncing up with more sell signals. We're getting a red bar buy here with the hawk. And we need to see a little bit of a test of the extreme to the upside also. The signal hasn't completed just yet. We'll let it get up there a little bit, hopefully. Okay, another warning dot. So once again, this is a signal that if you're going to take this way, you're going to want to cover it down here. All right, so we're just looking for a little hit and run type scenario. It's counter trend though, very risky counter trend. The other thing you can do is you can trade the failure of it, or you can just ignore it altogether. It is a red bar buy. It is our weakest signal. And we'll see if we get a little testing of the extreme here. Okay, stops roll to break even. They're just about to kiss our profit objective. And there they go. Oh, I thought they traded through there for a second. Get up there. All right, so now they've gone up. If they fail now and trade below this red bar buy, that would make that a pretty darn good sell. we're starting to get the market in a position where they're going to get a little pinched here in a moment. Perhaps the other thing we can do is maybe add to a position. So rather than commit to everything up front, oh, and I just heard a long signal. Who's wanting to go long? Oh, the Hawk and the Raptor both waffling a little bit. This will be interesting to see whether the Raptor is going to come out of this band as a double pullback signal. No, it's not looking like it so far. Or if it's going to come back with a buy signal. So Jim's actually watching the NQ here, and he says we've got a yellow bar sell buy signal. So it's printing a sell signal. It's going to fail, and he's looking for the failure and the reversal, which would have come right here. I know Jim likes to take his, he's a little bit more aggressive. He likes to take his earlier. I tend to wait for the signal to print. Oh, so our red bar buy did have some follow through, and the buyer's now getting a little bit stronger. We'll see whether they come back with the first micro macro cross there now. Into the hard edge on the eagle, so all mixed up. Yeah, Mark's been having a little problem on some of his fills. He says on our NQ trade, where we were just hovering above our profit target, or the market was just hovering below our profit target. He says that looked like it traded through to me, Eric, meaning our profit objective. And he said I had the same thing happen on the NQ a couple of times to me. And he thought that maybe it was him, but he said it's nice to see that I'm not crazy. Yeah, it depends our place in the queue. So here we have a first micro macro cross signal if you haven't recognized it. And what I'll probably do is, oh, we got a positive slip on that one. I'm going to increase my profit objective on this one just a little bit. See if we can't sneak a little bit more out of it. Yeah, it all depends on your place in the queue, Mark. If there aren't enough orders there to pick up your profit order, then, well, of course, you're not going to get your fill. That's one thing about the new simulators is I think they piggyback your sim order on top of somebody else's real money order. Okay, the advanced decline getting a little bit stronger, Jim says. They're about negative 13 or 1400 right now. So just looking for a little confirmation that the buyers are in control here, and then I'll get a little bit more aggressive with my stop. Jim says the low of the advanced decline was positive 470, negative 2260. So that's what, almost 1700 or so negative. That's very, very bearish. Joe says the news was supposedly good, yet the market seems to disagree. Yeah, I know. There's a surprise. The market always seems to do the opposite of what the news is. The talking heads will all be scratching their heads now. Okay, we're working into a 4-arrow consolidation. We've got 3 signals here. We might get a 4th yet before the market tries to pop up. Come on, give me one more bar. There we go. I could roll my stop already here. I could just wait for the market to trip the break even. You can see this high right here that we're struggling with. That is the king. That's the one we need to overcome. And where is that? That's 44.65. Sorry, 63. Doggone it, Eric. Just shoot a line. 44.65. If we trip, watch this. If somebody takes 44.65, get in there, Joe, with your 10,000 orders. There we go. Now we're starting to fill up a little bit on the buy side. Oh, that didn't have nearly the follow through I was looking for. I was expecting something, a much stronger reaction out of that. As my grandfather always used to do. There we go. All right, we hit our break even. Let's see if we can sneak a little bit extra out of this. There we go. Who's your daddy now? Get up there. And I'll go with the parabolics, I think. Or maybe the bar high-low. Throw it underneath there. Keep it cozy. There. All right, so I was reaching maybe a little bit too far with my $100 profit target. I should have taken the 50 when I had it. Broker will be happy. I'm just doing this to keep my broker happy. Some days that's what it feels like. All right, so we had a trend line like that, seriously got violated. So a nice looking little channel, the market broke out. And now we have this type of thing going on. Let's take a look over here at the soybean market, which is offering us a trend change signal, perhaps a trend change signal. A little bit sloppy this morning, a lot of sideways action. Not unusual for a Friday in a grain market. They tend to be non-committal going into the weekend, especially as we get to the time of the year where the weather tends to affect crops and estimates and so on. It is a trend change signal. Again, we don't really have a test of the extreme here yet. Therefore, covering the trade a long way back might not be a bad idea. Also, if you look at this, you can see the trade is very much sideways, right? There is absolutely nothing wrong with waiting for the breakout, the retest, and then the buy. Or should the market turn, the breakout, the retest, and then the sell. Okay, there's nothing wrong with doing that. In fact, many times it's the safer play. Yeah, like Joe says, the broker's always the winner. Obviously, I was a little bit too fast with my break even on this one also. I've done that a couple times now, haven't I? All right, I might need to get the break even out of the way. Yeah, Joe says the broker's always the winner. We're in the right business, but on the wrong side, I feel some days. Yeah, no joke. Real estate on Wall Street, pretty expensive. It takes a lot of money to keep those doors open. And look at this rally taking back pretty much all of this morning's early morning gains. So we opened up here somewhere. Nice decline. Trend change signal. Had the early trend change signal here. Well, actually, I guess we had the first trend change signal right here, didn't we? I must have been looking elsewhere. So that would have been a fairly easy target to hit. And then we come back with another trend change signal right here. I guess maybe it took the buyers a few minutes to realize that the early morning news was good news. Who knows? Who knows? The talking heads always make the news fit the market, don't they? All right. While we were busy, a nice little trend change signal here on the Raptor. The key to these trend change signals is this test of the extreme. Right? If you see this, if you see the testing of a, well, in this case of a low, but the same thing will be true of a high, and we'll take a look at that in a moment. And then you generate a buy signal, you can have some confidence in taking that signal. Now, unfortunately, this morning the market fell right out of the gate. This is a good example because a lot of times, we look at the test of the extreme like this sort of scenario. The market turns over and produces a sell signal, and you take the sell signal, and all of a sudden you get all this heat. Why is that? Well, because believe it or not, the real test of the extreme did not come right here. It came right here. Again, that's why very often you'll see me cover the trade way up here above the swing high, if at all possible, to allow for this type of situation. Now, in this case, we did catch a little bit of a break, and the market, declined nicely instead of coming up, trading through for a couple bars, and then falling off the map. And as with most things trading related, seeing the test of the extreme is always easier to do in hindsight. But as this was unfolding real time, I would have anticipated this to be my test of the extreme. Now let's just shoot a trend line across the bottom here just for kicks and see how that factored into our sell signal. So the sell signal's right there, and look at that trend line bounce. So there would have been a little note to self. The market gets down here near the trend line, let it break the trend line, and then take the trade. And you would have seen it never actually got through there. So then you come back, the bigger test of the extreme. Unfortunately, this moved just a little bit too quickly. The Raptor did not produce a signal there, but it did produce one down here a little bit later, and also with some pretty nice follow through to it. So if you're watch for those tests of the extreme, those swings with the higher lows or the lower highs, those are usually a very good indication of which way the market is going to go. Look at the the first half-hour range. Is that crazy or what? Yeah, and Jim makes a good point here. Jim says the yellow bars were also a heads up that a trend change was coming. That's a good point, Jim. Thanks for pointing that out. So when you're seeing these yellow bars, you get the signal fails, and then you get your counter trend signal. Or, yeah, in this case it was still counter trend. But the market being very fluid this morning, very cooperative, exceptional follow through both ways. And now we're right back to yesterday's numbers, where we saw a lot of numbers hovering around the 44.80 area. Especially toward the end of the day. The market spent a lot of time around here. It's also important to you've all heard this before. I was looking for a particular person in the room who I didn't want to upset anyone, but they did a fair amount of overtrading yesterday. with very poor results, which is almost always the case when you're over trading. You know, we're all anxious to find a good signal. We're all anxious to make money. And, well, we're all human, right? We get caught up in the moment sometimes. I've done it myself. And to my embarrassment, sometimes I've done it in front of you, where I get a little bit caught up in the moment, and I'll lose a little bit of my composure, and I'll start taking too many trades. When I trade for real, when I recognize that's happening, I stop trading. I pretty much flatten my positions. I stop trading, even if it means leaving a profitable trade behind. You know, leaving profitable trades behind, taking losing trades. Welcome to the world of trading, right? This is your business. This is going to happen. It's going to happen more than you like, but get used to it. It's going to happen. When you are trading, your objective as a trader is twofold. First, to take what the market is giving you. Today, the market is very generous. We're getting lots of good signals, lots of good follow through, a lot of opportunity here today for easily a 4-figure day. This is a 4-figure day today. If you go in, even with average size, you should be able to get in and out of the market today and pocket 4 figures. Look at our soybean trade, which just closed out. And I think that was on a onesie. It just hit our profit objective. We banked $250. So the market's very, very cooperative today. Those types of days, you still need to maintain your composure. But days like today, trading can be a lot of fun. But even on a day like today, you want to be careful not to overtrade because as you all know, it doesn't take very many losers to wipe out a lot of winners. Right? The losers always seem to add up faster than the winners. So your objective as a trader, I like the idea of having a quota, a trading quota of I'm going to look for X opportunities today, and then I'll take a look if the market conditions allow. Maybe I'll look at taking another trade. Otherwise, I'm going to close up shop and I'm going to go do something else. And really, as traders, isn't that the life that you envision for yourself? I know traders who are tied to their computers. How is that different than being tied to the assembly line or tied to an office desk? So I think, and again, this is my opinion, I think it's a good idea to have a quota. Now, my quota is 2 or 3 trades a day. That's it. 2 or 3 trades. What that allows me to do, though, is it really allows me to focus on the opportunities. And when I'm in the room here with you, and you've no doubt noticed when the markets are slow, I always try to qualify it before I take a signal that I might not see as a very attractive signal, where I might be looking at this trend change signal that's building, and I start talking to you about possibly selling it and doing this, that, and the other thing. But I will say we are in a little bit of an uptrend right now. So counter trend trade, no test of the extreme, blah, blah, blah. This is all making it a little extra risky and so on and so forth. So sometimes in the trading room, we'll take a look at something just because there's nothing going on. But when you're trading real money, if there's nothing going on, there's nothing going on. Remember the first premise of trading, or I can't think of it, the first axiom that you should have, the first rule of trading, is that you can only take what the market is giving. And there's going to be a point in the day where the market is done giving. You know, I showed you how we look at market legs, right? So here we had a fairly significant swing low. You can either take this swing low or you can take this swing low here. It really doesn't matter. Both, regardless of which one you look at, this is leg number one. Okay, so we've broken the significant swing low. Why is that a big deal? Well, we know the market will tend to make at least two moves in the direction of the breakout. So that will give you a little bit more confidence in taking this next signal. So here's leg number two. Again, very nice move. We know that legs 1 and 2 tend to be the strongest part of the move. Look at what happened with this signal here, leg 3. Non-existent. Now, had you used your ATR as a filter, you would have never been brought into that trade. But as you mature as a trader and as you start to look at these things, you start to look and you say, okay, well, that's a soft edge bounce. It's a with trend signal. But I've already had two rather pronounced moves in the direction of the breakout. I need to be a little extra cautious here. So maybe I'll take a second push entry. Even if this market had traded down a little further and then retreated, you could say, well, I'll take a second push entry and I'll enter below there and perhaps cover up here. Or I'll definitely dial down my risk amount somewhat. Well, in this case, I'm just taking a onesie anyway. But I'm going to take steps to protect myself in case this trade does not work out as planned. Because you can see here on this leg here, you made about 200 and change, $230. And this trade here, you're looking at perhaps risking what you earned this morning on a less than desirable trade. But if I go in and I only have a 2 or 3 trade quota, maybe I'm just going to pass on that trade flat out. That's not a very promising looking trade. Nobody's holding a gun to my head. Nobody says I have to take every trade. Right? That's what I really like about the quota idea, is it causes you to focus. It removes I think it removes an enormous amount of pressure on your trading. And so then the market comes back and now all of a sudden it breaks here. And now you're thinking, whoa, that was pretty significant. And again, it doesn't matter whether you count this swing high or this swing high. This is still leg number one. So the market comes back and now we're actually looking for leg number 2. We normally anticipate 2 breakouts in the direction, or 2 moves in the direction of a breakout. And move 1 and move 2 tend to be the strongest. Of course, we have no idea how far move 2 might go, but that is the premise of it. With your tools like the hawk, we could see as many as 5 or 6 legs in the direction of the breakout because the hawk develops everything so much faster, right? So here's leg 1. This kind of goes sideways a little bit. Then there's leg 2. And again, leg 2 tends to be the bigger one. And now we're trying to work on leg number 3. So leg number 3 may or may not be finished yet. Of course, if it turns over and starts going this way, well, guess what? Now we've had our test of the extreme, and we can get ready for perhaps a selling signal. But here too, if I'm trading and I'm only looking for 2 or 3 opportunities a day, I will easily get those on the hawk. I don't have to try to, this red bar buy did work out and we had our reasons for taking it. But there would have been nothing wrong with letting it trip. Oops, sorry. Letting it trip and, oh, there's my first micro macro cross. Let's take that instead. Right? It's a little bit more reliable. And there we have our first micro macro cross and or 4-arrow consolidation, however you wanted to see it. So you can hold out for those higher probability signals. Right? Here alone this morning we had, let's count the first micro macro crosses alone. There's one, there's two, there's three. Well, there's my quota right there. 3 high probability signals, all of which had good results. And even if I'm a small trader and I can only take one contract on each of these, and let's say I have a $50 target because I've only got the one contract, right? It's going to be very difficult for me to know the market is going to have any kind of follow through here today. I could try to do a runner. I could roll my stops to break even, try to do things to get a leg up on the market, get a little bit of advantage. But even if I had only gone in for my $50 targets on these 3 trades, and you might be bemoaning the fact afterwards, oh, look at all the open profit I left behind. You should be thinking like Wall Street. You should be thinking sure thing. That's why they scalped for fractions of a point, because they know they can get it. They don't risk money like we do. It's not even their money, or not yet anyway. They only deal in sure things, or as close to a sure thing as you can get. A $50 target on your scalping is pretty darn close to a sure thing, at least as far as you and I are concerned. So what's my point? Well, if I can do this, if I can take my 3 trades, hit my $50 target each time, that's going to be $150 a day. Okay, it doesn't sound like very much. But over the course of the year, if I average that day in and day out, take my 2 or 3 trades, so I'm making $100 or $150 a day, I will be up $20,000 at the end of the year. Think of that for a moment. $20,000 just by doing this, waiting for the higher probability signals, taking my money when I have it. Does that mean I'll never have a losing trade? No, of course not. You've been in the room. You've seen even a first micro macro cross signal fail. Is it likely that it will fail? No, not at all. But it's obviously not 100%. But think about that. That's just on a single contract, taking 2 or 3 trades a day, nabbing $50 a time. That's 20 grand a year. I guarantee you one thing. If you can do that day in and day out for a month, there is no limit to the amount of money that you can earn. No limit whatsoever. It doesn't sound like a very difficult task, and it doesn't need to be. But you do need to exercise, I hate to use the D word, discipline, but think like a professional. Think like a fighter pilot, not a guy who's playing a video game. Okay, so now here's that second leg on our trade. So I was yapping a little bit. I didn't get in on this one, but it looks like it's having decent follow through. So again, a little bit higher probability signal than looking at taking this one down here. This is how you can qualify your trades. And it's honestly, it's not always easy to see. Sometimes you're going to look at it, and the market's going to be like this, and you're not going to be able to make heads nor tails out of it. That's okay. You know, if you can't get a handle on what the market is doing or trying to tell you, just stay away for a little while. It'll sort itself out. It'll come out and it'll break like this, and you'll be saying, ah, crap, I missed the move. All right, well, try not to panic, right? If you're a fighter pilot and you start panicking, that's not good. Try to keep your composure. Try to take a look at what's going on and try to assess the current situation. You say, ah, look at this. Okay, we've broken the swing low. That's significant. The market's coming back. Oh, printing another signal. Let me try to get on board with this one. And it's always risky, right? There's no guarantees. The market won't try to pull back to the hard edge or even to the high. Can we cover it all the way up there? No, we can't. So maybe we need to, try to cover a little bit deeper into this resistance area. What if we shoot a trend line up here? What if the market tries to come back and retrace the underside of the trend line? These are all things that could happen. Remember, your stop loss is only there to protect your capital when you are sure you are on the wrong side of the trade. Otherwise, your stop loss doesn't count. Right? Your stop loss could be way, way up here. What's it matter if it never gets hit? That's a rhetorical question, by the way. It doesn't matter. That's why I'm not a proponent of running very tight stops, because very often they can be detrimental to your trading. All right, looks like this is going to be a trade where they would have hit our break-even trigger and now would have stopped us at break-even, which it's all right. It's again, if you're a small trader, it's okay to run a break-even trigger. The times it doesn't work out will certainly offset those times where it will save you a bucket full of money. Okay, Micah's got a question here about the two legs on a breakout. He says, is that only on the eagle or on the other birds also? It is a market principle that is true across the board, whether you are watching a DTS chart or a 5-minute chart or a tick chart or whatever. The nice thing about the DTS charts is it's much easier to recognize with the mean Renko bars. But no, it works for all the birds. And the idea is you don't want to micromanage this type of thing. If it looks like a significant swing point, it is a significant swing point. And oftentimes it's not going to matter. So whether you look at this one up here or this one down here, what you're looking for is those areas where the market is shifting, where the buyers and the sellers are changing hands. Buyers are losing control, sellers are losing control. I would consider here on the Falcon this a significant swing point. Why? Well, the market dropped like a rock to 44.48 before the buyers put the brakes on the sellers. Buyers buy the market up, sellers say, oh no, we're going to take the market back and we're going to run it back down here. And the buyers say, oh no, you don't. And then they stop them right here. Right? So think of, how much buying pressure there was up here. And then we had a few more buyers join in right here. Now we have a whole lot of sellers coming in here to put the brakes on such a quickly declining market. And now obviously we only have a few sellers wanting to come back because the buyers are really pushing hard again. Actually, there are probably a few more sellers than that, but we got a lot of buyers starting to push the market again. So that's what makes this a significant swing point. So this now becomes leg number 1. So there goes leg number 1. Big move now. Oops, I'm sorry. I keep hitting the wrong thing. Now when you're counting legs, and you can see here, what I mean here in this instance, it doesn't matter whether you counted this swing point or this swing point. This is still leg number 1. When you're counting swings, as with most things trading related, you don't want to micromanage stuff. I don't want you to look at this chart and say, oh, well, this is leg 1, this is leg 2. Well, in hindsight, yes, maybe. But when it's unfolding real time, this to me is all leg number 1. Which means that I can still anticipate another move higher. This is a more significant retracement against this leg here. So now I'm on the lookout for another signal and for leg number 2, and we get that signal right here. And there would be our trade, and now we're looking for leg number 2, and voila, we hit our profit objective. Now, even now, it's hard to say whether leg number 2 is finished or whether it's going to continue higher still, because sometimes you'll see it flatten out just a little bit and then continue, so that when you look at it after the fact, you'll say, oh yeah, that was leg number 2 right there. So it's always going to be a little easier to recognize in hindsight than it is in real time. But if you don't micromanage it, if you don't, look at every counter trend bar as a pullback, if you wait for something that actually looks like a pullback, you'll be okay. Now with the eagle, we normally see 2, maybe 3 legs on a breakout. The hawk, as I mentioned, I've seen as many as 6. 3 or 4 tends to be the norm. And the falcon, of course, is going to follow somewhere in the middle there. You're going to get probably at least 2 legs, usually 3. The same would be true of the raptor. But it gives you an idea. We all look at the charts and the market's moved a long way, and in the back of our mind we start to think, well, the market might be getting tired. Well, that's because it probably is getting tired. That's why also things like shooting a trend line will make some things pretty obvious to you. And let's shoot a trend line here also, where you start to see, oh, look at this, the market is starting to shallow out, right? It's starting to lose some of that upward momentum that it had earlier. Maybe. And we are getting a trend or a late filter entry signal here, which is a high probability signal. Right here, filter went out of sync, trend line did not. So there's our late filter entry signal. Well, I don't know, let's risk it down there. But here too, right, we've seen, we're starting to think, okay, well, maybe things are slowing a little bit, because here's leg 1. Leg 2 I know tends to be a little bit bigger, but it looks like we have a little bit of a retracement here. Can I maybe sneak leg 3 out, hit my profit objective before the market reverses? And there you go, you hit your profit target. Would I be surprised to see the market turn around here? No, not at all. First off, we've hit our high probability target. We know sometimes that causes the market to react. Secondly, we know if we shoot a trend line that the market is getting a little bit shallow here. I guess my point is there's a lot to be said for being selective on your trades, for limiting the number of times you expose yourself to the market, for obviously the way that you manage your trades. Yeah, like Jim says here, one of the hardest things to believe in are wide stops. Let the market breathe. That is very true. I had a broker friend down in Florida who was always telling me, Eric, your stops are so tight. He thought my stops were tight. You guys see what kind of stops I run. He thought they were too tight. He said, Eric, run a wider stop. Give the market a chance. We're into the highs of the morning right here. Jim says we might see a reversal and maybe a test of the low. That could very well be. You know that? I could see them slowing a little as they get to 4,500 on the NQ. Days like today are fun to trade when the market actually has some activity, has some follow through on the signals, stress is a little bit lower. Actually, you look at the market and it's pretty much been textbook today across the board, whether it's first micro macro cross signals, 4 arrow consolidation signals here and here, macro pullback signals, another 4 arrow consolidation. It's almost like you couldn't miss. Fish in a barrel. Well, soybeans have since slipped away since hitting our profit target. So here's the soybean market. We exited around here. The market's giving us a little bit of a reversal, kind of chopping around a little bit. Back into the hard edge on the eagle, even though we're producing a trend change signal to the downside. Probably not something I'm going to get overly excited about today. Again, if you have that mindset that I only need to find 2 or 3 good trades today, then you don't feel like you have to go into a signal like that, where you're approaching the hard edge of the eagle, your hawk is starting to produce a bunch of yellow bars. Even in your gut, you should be getting a little bit of a feeling that maybe something's not quite right. Actually, Jim will be able to tell me here, but given that we've retraced all of this morning's decline, I bet you the advanced decline numbers pretty much even up right now. Probably not too far off of zero somewhere. Oh, yeah, see, there you go. Positive 1,300, negative 1,500, so they're just a negative 200, which really, as far as advanced decline numbers go, is pretty neutral. Jim is asking, what was the NQ's 10 a.m. low yesterday? We'll shoot a line right here. This was the low, 44, well, just about where we're at, 44.9350 it looks like. Right there, right on the number. Yeah, look at that, bounced right off of it. Good call, Jim. So we might try a soft edge sell here, but once again, we need that test of the extreme before I'm going to get too excited about it. Crude oil trying to muster a rally here on the Eagle. This morning's action, well, I guess it did have some action to it. The overnight big decline, a little bit of a rally after the market open, and then they've just kind of been going sideways. So if you were inclined, I suppose you could do an OCO order here. Buy above, sell below. We have had little bits of tests of the extreme going either way. But you know what? It's Friday afternoon, or late Friday morning, I should say. I don't think we're going to see any serious move out of crude oil right now, unless there was an OPEC meeting or something, wasn't there? I remember hearing something about that. OPEC meeting. Oh, all day today. There we go. Okay, so now we're printing our, actually what I'm going to do, I'll wait for the buy signal to print, I'll wait for the ATR to flip over, essentially, wait for the trade to build itself correctly. So they're starting to paint themselves into a little bit of a corner. Trade it back down here to the hard edge. We'll see if they come up with a bounce and a failure. That would be an acceptable sell, especially given that we're starting to breach these trend lines. Starting to shallow up on the top side. Okay, well, things are slowing down a bit again. Okay, I was a little surprised that this first micro macro cross signal that cropped up right here, that it did have the follow through it did without first giving us that test of the extreme. So this signal here, when it was printing, everything wasn't in sync yet. So technically that's not our first micro macro cross. This one, however, is. Because I haven't had the test of the extreme, I probably would want to cover it up here. And yet you can see the market, oops, doggone it. And yet the market fell off very nicely without any hesitation. So that tells me a couple of things. That tells me that without the test of the extreme, the market could be getting very thin, very quiet. Let's see what's going on with the Geiger counter. Oh no, we're still getting some decent volume, it looks like, flowing, but you know, you can tell the orders, there's still some sizable orders there. A little bit of a spike in the histogram as we're approaching this trend line. That's suggestive of the buying or the selling stops getting run over, and we might actually see a little bump to the upside. Well, I don't know, you guys. It's taken a long time to produce anything here, and it is Friday. I think we're going to shut up shop a little bit early today. If you are going to hang out for the afternoon, the market does seem to be turning over a little bit. I would try to hold out for that test of the extreme. We're probably going to see a little bit of a bounce here now that we've encountered the hard edge and this lower trend line that was down here. So there's that bounce coming. But everything is kind of leaning toward a weaker market, potentially. But we do need to see it pick up the pace. However, I'm starting to think that the move of the day is done, I think the market might be finished, at least for today. All right, you guys, have yourselves a wonderful weekend. I will see you again on Monday morning. We'll talk to you then. Oh, before we go, Joe says, can you take a look at crude? Yes, 1 second. Let's take a look at crude oil. And crude still kind of stuck sideways. Here's crude on the Falcon. So we had the move down, the run up, very similar actually to the NASDAQ this morning. That's why I used to watch crude oil I actually started trading crude oil by watching crude oil in relation to the stock indices, because very often it would do the same thing in advance of what was going on in the stock market. In other words, if crude oil prices went up, stock market would go up. If crude oil prices went down, stock market would go down. But we're very much in a sideways action right now. We're working on a trend change signal to the upside. It's possible, but so long as we're within this range here, it's going to be a crapshoot, quite frankly. If we take a look here at the Hawk, I think the Hawk does the best job of painting this picture. It's just sideways. Look at all these yellow bar clusters. We can't make progress higher or lower. Printing yet another yellow bar. I think crude oil is done for the day as well. Okay. Just make sure there's no other questions. No, it looks like we're good. All right, you guys, we'll catch up with you again on Monday. Talk to you then.